Welcome to Trading Lounge and the Australian report, and we'll be looking at the ASX 200 in a moment. I just want to have a look at these stocks here. The bottom one is BHP, so it's resources, and the top one is CBA here. Now, the reason for showing these is because this one here, these are weekly charts, or could be daily, but it looks weekly. So the thing here is that CBA takes up 8 or 9% of the actual ASX index, and our index is really dominated by the banks, and then secondly by resources. Of course, we've got retail and consumerism and so on and so on. But these are the two elephants in the room that are tugging on the ASX, on the index all the time. And, you know, when these two markets are running together, say like in the GFC here, then as just an example, this could be a 5-minute chart, but, you know, when these are moving in the same direction, we're going to see the ASX really, you know, extend out and move strongly, and, you know, and that's, you know, a nice place to trade it. But, you know, when we get to see that the markets are moving in opposite directions, basically, you know, in a nutshell, so we've got the banks moving up and these guys moving down, then, you know, it can pull on the index and create a lot of sort of skewed wave counts that are not very clear, and that's why it makes it sort of difficult in a sense. So it's much easier to sort of track the Nasdaq in a way, because, you know, we've got, you know, the technology's the new age in a sense, and those stocks have got massive volume, the francs, and, you know, it makes it easier to count those particular structures. So we can get a lot of skewed wave counts in the Australian market, and of course also too this kind of behaviour that we know here. A lot of the commercials, the big players in the market for Australia, realise this divergence, so to speak, between these sectors at certain times, and they would play to that. You know, they would be moving funds out of one and into another as such. So we can see at the moment here with, say, BHP here, that we've got this trend up. We've got the banks correcting through here. So it's probably true to say that when this market finishes its trend up through here and starts to move down again, then this bank here will, you know, continue its correction here, and then move up here. We know that with CBA we can count this as wave 1 and 2 here, and wave 3 here, and we know that we're in wave 4 here. It's just getting rather complicated as a bit of a triangle pattern, and I'm looking at it like this here, if I've got that in view here. So we've got, if I can just squash that up a little bit here, we've got wave 3 up here, and I'm looking, this is the next simplest step here, is wave 4 here, but an A and a B and a C and a D and an E wave here. But this triangle could get more complicated. I need to ponder it a little bit more here, but as it stands at the moment, we can look at this as an A, B, C for the A wave, a B wave pulling back up 61.8%, and then we need to look at this as a 5, as wave B to wave C here, as 1, 2, 3, 4, 5 here, coming down into this E wave here. So the banks appear to have further to go down in this space here, which would also leave the BHPs of the world. If I could just remove that for a moment. So this one here is BHP here, and Rio and so on. They still have, these guys here, they still have further to go to move up, to finish their trends up through here as well, through here. I won't get into that today, but long in resources and short on banks is pretty much the thing that we're looking at here. So yeah, look, I just thought I'd point that out here. It just gives you a bit more depth on what to look for, and there's a lot of refinement about what I said, and you can yak on that for ages, but it's really about getting in trends on this one here. So with the ASX200 here, we're looking at this is as a wave 4 down through here, and this is quite close to this. I mean, this correction's a bit of a blend between some of the European markets and the US markets. So the US markets pretty much moved down from this top here. So some of the European markets, were back at in this direction here, even if not further back. So in one way or another, they haven't all topped out together in this sense, but they're in there because of this strong move down through here. When fear comes into the market, it really brings all the markets really close together, and they all sort of tune in. They all do the same sort of thing on a global level as well. So what they've all done in a nutshell is they've all tuned in to this move coming, or this coming down, this strong move down through here, and also this move up here. So they're all kind of tuned in now. So with the S&P 500, for example, we're looking for an A and a B and a C. So we're calling a top in for the US markets here, and for the Australian markets here, we're basically in our box. So from that high here to this low here, we were looking at a 50 and 60% retracement level, basically back up to supply where this support was through here, and also we can gravitate over the closest largest number. Now, this is a place to be cautious. If this was, yes, if the trend is up through here, and that's fine. If we were going to go, then the market could move up to, let's just go to the 4-hour chart. It'll just be a little bit easier to draw on, if that's okay. So don't worry about this. That's just my labeling. So if the market was going to, trend up here further, as such, which has broken its trend, which is not the end of the world, by the way, but if it was going to trend up further, we can go with that, and we'll have a strategy for that in a moment. But if it was going to go, continue to trend up through here, we would catch it at the 6,000 here. So we would see an arrival, a reaction, because there would be profit taking and sellers sitting at 6,000. And then if it's going to push up, it would push up with all its energy, and then it would fold back here. And then it'll have a little bounce off here, and then it would move through here. And then if the demand was in there, then it would push up from this point here and then move up from there. So we wouldn't really get involved in a lot of this. We would sort of sell out here. We would have an entry above this one through here. We can also have an entry through this one here as well. So this is the classic trading levels pattern that could happen at any level, at any number, on a 5-minute chart or 1-minute chart or whatever. It's just the pattern. So the other variation of the classic trading levels pattern is we have the arrival, the reaction, the first high above the level, and then this 3-wave structure here, it actually all occurs in this first wave here and then pushes up from here. That's the variation on that. So those are the two patterns there. The other pattern is the overshoot, where it can just go straight up here, and the distance that goes up is pretty much the distance that goes down below and above the level, and then it kind of vibrates into the level, and at some point it will do its thing and then push up from that point. So there's not a lot that could actually happen at a level anyway, but we would need to see one of these here before I change this count here. So it's quite okay for it to push up from this point. So let's go into the daily chart, so the hourly chart, and have a look at this at the moment. So we were looking at the A wave down the bottom through here. I can move that up here a bit. And the A wave was clear to me, and so was the correction here. This little thing is not clear here, but I've used the same pattern that we've used in the US basically. In this, no, we haven't actually. We'll use it slightly differently. But anyway, I won't sort of confuse the issue too much. But I'm looking at this as 1, ABC for 2 here, up for 3, back for 4, and a short wave here up for 5. If the extension's in wave 3, then wave 1 and wave 5 will be roughly the same. So look, it's not a very clear wave count. I'm not that happy with it, but we have to at the end of the day label in one way or another, and then we could label, and we say this is the labeling. I'm not confident with it, or I'm very confident with it. So I'm not that confident with it, but I would also expect resistance in this box area here as well. It doesn't mean that it needs to turn from here. Like I said, it could go up and retest the 6,000 here. So there's a couple of things here. Is that we need to be trading. The first thing is that because I'm unsure, that we need to trade less. So it's possible for it to top here and move lower. And there's also a possibility here too that, so if it took the green line out here, so we would have had that green line up here, then to this one, and then we lower it down to this one. So if that gets triggered, we can go along from there, okay? The other point here is that if we looked at this as an A wave here, and then a B wave here, and then a C wave down here, which would be 1 and 2 and 3 and 4 and 5 here, it could trigger our shorts and take out our stops and then move up from this point here and have one more top up here and then roll over from there. So that's what I don't know here. So this is why I think that we need to pretty much trade less here, but at the same time we don't want to miss a short trade down here, because we would be looking at this to move down, let's just say 5.7 at this stage. It could be 5.650, it could be 56, it could even be lower than that too. We'll track the wave count as it goes down, but we wouldn't want to miss that. So it may take us 1 or 2 shots to get into this trend on the downside here. The top side is easy to work with. So the move, we want to be on the right side of the market. Now, to me, that means being on the right side of the closest, largest number. So we've got 5.9 here at the moment, 900. So that's the number that the market is working with. So I wouldn't really want to be short above that number at this moment. So I would want to set up. So if this market moves down through here today and finds its low, it will come back and retest it here. So then you put the entry point 1 point below the previous low here, and then when it comes back down, if it clicks it in, that's fine. But we also need to understand this would be 1 and 2 and 3 and 4 and 5 here. So what will happen here, after it probably do a double take here, because this would be 1, 2, 3, 4, 5 here, and then as a third wave here, then a fourth wave would come back to the fourth wave of 1 lesser degree and then go down again through here. But the main point here is spending time and retesting under the 5.9 before it drops here further, and then I feel that this trend would be worthwhile getting into here. I mean, there's all the sub levels in here, of course, and there is 5.8 here, which will cause support here as well. And also too, even though we're expecting to come down here further, it's always good to know where the balance in the things are. So, which in this case it doesn't really matter because we already know the number here. So that's the 50 and the 61.8. So there will be, there will be support in that area there anyway. So we know that. So yeah, this is where we are today, really. So if you've been long from down here, you really do need to protect, or you've been long anywhere through here, this is a time to protect the situation. You could, if you wanted to, really wait for these 5 waves to go down here if you knew what you're doing. So an A wave, a B wave, then 1 and 2, down for the third wave here, a fourth wave pullback, down for 5 here, and then put the stop under this one here if you wanted to do that. That's okay as well. But yeah, the entry, if you're not long, then you might as well be short. All right, I don't think I need to go into it any sort of further than that today. So there wasn't a lot of movement in the S&P. The other thing you could probably watch out for too in this coming down from on the banking side of things is the Australian dollar. Looking to short, have a look at the. I mean, you might not trade currencies, and that's fine too. I'm not encouraging you to do that because trading indices and currencies very short term is very tricky business. It's very difficult to do. I find it much easier to trade stock end of day. It doesn't take up as much time. It's less stressful. I have more control over it. Doesn't require as much attention and so on and so on. But if you're trading this market here, the ASX200, you want to know where certain things are. So you want to know where all the resources are. So crude oil is important in this stage. Iron ore that we don't look at probably enough, which is this chart here. This is why I went long in Rio. This is an hourly chart here. I was looking at this little structure moving up here as an impulse wave. So I could see that it was turning into an impulse wave. So I thought, well, let's just go into Rio at this point here. So this is a little third wave happening up here at the moment for iron ore. So I can see that this is probably still got further to go up through here. I know Vale and we talked about Vale before, and BHP. So they're all sort of pushing to the upside here. So obviously you need to watch the banks. They're moving to the downside. So the banks, the banks and the currency, because they deal in money, they're connected, aren't they? So the Australian dollar is important, the carry trade is important, so the yen Aussie is important, and the US yen would be important as well. Not to trade, but if you can see them all moving together on a tick basis or intraday basis, then they can be quite helpful in understanding where that momentum or power is coming from, because the whole global markets is really about how much you can get for your money, so it's all about the interest rates. The carry trade. Alrighty, enough. Cheers.